Welcome to Inside Bitcoin on Bitcoin Center. Welcome back, Jeff Walton, a.k.a. Punter Jeff. It's great to have you. And congratulations on the new role, VP of Bitcoin Strategy at Strive. Thank you for joining us. What was your impression of the Q2 earnings call from Strategy and Michael Saylor?
Yeah, Q2 earnings call was incredible. It was a great presentation. Once again, they are leading a masterclass of how to interact with their investors and to provide information and reshape this world of finance surrounded around Bitcoin. So it was incredible to watch. Another just great presentation, really walking through all of the instruments. And it looks like they are listening to what the market is concerned about, and they are hitting on all of the things that they are seeing in the Twitter sphere and the concerns that people have, and they're putting it in a really good presentation to the market that's easily digestible, albeit it takes time. You've got to actually watch the entire thing, and people probably need to stop and listen to things and think about it for a little while. But another incredible presentation. It was also really cool to be a part of the panel at the end that got to ask a question. And prepping for that was interesting because I was trying to figure out what question do I ask? Like, how do I make a hard question that's like really powerful here, and how do I make sure that nobody else asks it? And it was a great time. It was great to have Bitcoiners, like actual Bitcoiners, on asking questions as opposed to these typical stock analysts that work at these investment banks that are trying to put out price targets on the stock. And now you are bringing in independent people that are focused on Bitcoin and talking about the equity in a positive light, but also analyzing things very seriously. Like this is a very serious part of our life. So it was it was a great experience. And the question I asked was, I got a really great response from Saylor. I was asking about based on the changing characteristics of the different types of leverage that they're taking on, given that the preferred debt or the preferred equity has a different leverage characteristic, given that it's perpetual forever, compared to the convertible debt, how does that change your view on leverage? Can you take on more leverage? And got a great response from Saylor that because there is no duration, they can potentially leverage the balance sheet a bit higher than they have in the past. And then walked into this concept of Stretch being their iPhone moment, providing a product that the market hasn't seen before, but everybody really needs.
Sure.
So, it was great.
I love how we kind of phrased it as the Amazon of digital assets. I thought that was really interesting. What about your takeaway on their ability to raise capital?
Yeah, so I think this is something that's missed by a lot of the market and the broader market, the broader Bitcoin market, the broader community, is the fact that they have shelf ATM registrations on each one of these preferred equity instruments. Now, this provides them the ability to raise debt-like capital at the push of a button and after a phone call. And it may not even need a phone call. It might just be push of a button based on some algorithms that they hand over to the bankers and the bankers control. And historically, if you wanted to go raise debt capital, you have to put together a pitch deck. You go out to the market and you say, hey, I'm looking to raise $100 million of debt capital. You go canvass the market. You go find best terms from anybody in the market. And you probably go syndicate a deal. Maybe you get $50 million from one company, $50 million from another company. And that's the entire process. And it takes a bunch of time. It takes a bunch of energy. It takes a bunch of people working on it, going in one direction. And now they've streamlined the entire process. So they've put together a pitch deck. They went out to the market. They raised capital via these IPOs. And then they put an ATM shelf registration on it. So now that they can press a button and raise that capital whenever they want. So they don't have to go through that entire process again of going back out to the market to go raise capital when they want to. They can do it at the push of a button and bring those dollars in the door when it makes sense, when they want to. And they could do that whenever. They can go issue these these stocks whenever, it will impact the price of these instruments and how they trade. So they want to be careful about how they issue them, when they issue them, the liquidity of the instruments, making sure that they continue to be viable within the market, the economics make sense. And as these instruments get more popular within the market, as the industry begins to accept them, as debt holders begin to look at these instruments as crucial pieces of their portfolio, as fixed income managers look to add these instruments to manage their long-term liabilities, and as these instruments get rated, their ability to raise that debt capital is going to skyrocket. And they're going to be able to do it with a push of a button, as opposed to having to canvass the market and go raise this capital. So it's the opposite of the convertible bonds too, right? If you think about how the convertible bonds worked, every time they wanted to go issue a convertible bond, granted they did them very quickly, they would have to go out to the market and say, "Hey, I want to issue this convertible bond. Here's the terms." They had to go get agreement from the market to go issue these things. So back in November, when they issued the $3 billion at the top, they had to get something out to the market and say, "Hey, we want to issue this." It probably started 3 or 4 days beforehand, before they issued the convertible bonds. But it was energy and effort that they had to put in to get that capital in the door. And now they could just do it at a click of a button, and it's perpetual. There's no expiration. So this is a fundamental change in the capital structure, and provides them just maximum flexibility and infinite capital raising potential. So I'm incredibly excited about it, and I'm looking to emulate it.
Wow. Yeah, that'd be interesting to follow you emulating it. What did you think of, or how do you see them positioning themselves for Q3 earnings with the FASB rule changes and maybe having some trail or tail here with earnings?
Yeah, so Q2, the earnings report was huge, right? They had this blowout earnings per share. They posted $32 earnings per share. Analyst estimates were negative 6 cents, and there was a lot of attention on it. Rightfully so. A lot of people were speculating if the price of the stock would move in any certain direction as the world reprices, balance sheet unrealized gains in one certain direction, and a lot of the market sentiment was that this is a one-time gain. And even a lot of the news articles that came out is this is a one-time gain. And so far through 40 days of Q3, they're sitting on another $6 billion unrealized gain, potentially more, and $20 earnings per share through 40 days of Q3. And this is fundamentally, it's a new way of thinking about how to value companies as a balance sheet company and the assets that they hold on a balance sheet, as opposed to expectation of future cash flows, something that may happen on the horizon. Both of those measures, in my opinion, are measures of financial strength. An expectation of future cash flow, to me, that's a measure of financial strength. Another measure of financial strength is the actual assets that you hold on your balance sheet and how they're growing, and your ability to continue to raise capital to buy more assets. So there's two valuation systems that are clashing together in epic proportions, and there's a lot of disagreement on this and how you should value these companies. And a lot of people in the expectation of future cash flow side are saying, I don't want to pay a multiple for somebody's assets that they hold on their balance sheet. And it begs the question, why does anybody hold any equity to begin with? Like, why do you hold an equity? Like, do you hold an equity to store your value? Do you hold your equity to gain value? Do you hold an equity for dividends? What's the point of the dividend? Do you hold an equity for stock buybacks? What's the point of the stock buyback? What happens if there's disruption in the market? What happens if the market change or shifts on you? What's the best position to be in for long-term capital appreciation? And I view that a bit differently than other people. I'm not in the expectation of future cash flow side. I'm in the balance sheet strength side, because I think the viability of that balance sheet into the future is going to outpace 99.9% of companies probably on the planet.
Yeah, what the biggest takeaway I had was the strength of their balance sheet now with Bitcoin. They puts them in fifth in short-term investments on their balance sheet, right behind Google, Amazon, and Microsoft, which it looks like from Fang Li's estimation, they could pass within a year or two. And it just puts them behind Berkshire Hathaway with, the, what, $348 billion, which they're in arm's length reach if there's a strong bull market here. What was maybe your final for this conversation takeaway going forward as we wrap up?
Yeah, going forward, there's so much to be excited about here. The capital markets are going to reevaluate things in the future, factoring in assets on balance sheet as we enter this period of AI disruption. You know, the S&P 500, seven of the stocks in the S&P 500 outperform the S&P 500. The other 493 lag. And those 493 companies are subject to massive AI disruption. And they're going to see we're going to see a significant rollover and turnover in the companies in the S&P 500 over the next 10 years. And they're going to be replaced by AI companies and companies with strong balance sheets that can withstand AI disruption. And I'm positioning myself to be a part of, a part of that journey in the rollover of the S&P 500 and get into the Bitcoin 100.
Well, thank you for joining us on Inside Bitcoin, this edition of Bitcoin Center. Can't wait to watch you cook, Jeff. We'll have to have you back soon. Please like and subscribe. Thank you so much, Jeff. Talk to you later.
Take it easy.